Okay, so here's what we have to remember from this date forward, 2025. I don't know if you're still writing checks or not. It's been a while since I've written a check, but just the other day writing 2012 in there and having to stop and think, wait, what year is it really? It's 2025. Welcome to the new year and welcome to Market Day Report. All right, let's see how markets have been trading in the overnight session as we start this new year. March at 458.5, that's up 6.25, with next year's December new crop 443.75, up 4.75 cents. Soybean trade. Soybeans have been up just 0.1% week over week. But still, when you look at where we were last year at this same time, off 22%. Trying to rally this morning, however, January 998.25, up 16.25. March now most active 1010.5, up 18.75. Over to the wheat market. We'll start Chicago in July, up 3.25 at 569.5. For hard red, July 576. That's 3 higher. Spring wheat, March 595.75 up 2. And to New York, where cotton futures clock in at 69.17, up 77 points. Brian Hoops, President, Midwest Market Solutions. Okay, Brian, first, Happy New Year, good morning, and what are you watching?
Good morning, Tony, and Happy New Year to everybody. So we didn't have any grain trade overnight, so we're kind of having one of those hard opens again this morning. I'm going to look for beans to be a little softer, 3 to 4 lower, meal to be a little bit softer, but wheat and corn more fully steady. So the U.S. dollar index did start trading a lot, as well as some of the metals and the stock market, crude oil. Those sort of markets did trade last night, and the dollar is higher once again. So that's not going to help us out. And the news from a weather standpoint is what's going to drive us not only on the opening, but into the closing bell. So we had better than expected rainfall in the last couple days in Argentina. That's why I think we're going to open a little softer. But you look at the extended weather models, 6 to 10 day, and in both U.S. and European models, they're a little bit drier than desired once again. So we're going to go out to another 10 days without really any meaningful rainfall for parts of Argentina. Brazil looks to be, on at least southern Brazil, on the dry side as well. So even if we get this lower opening, I don't know that it's going to last very long. It may start to see some buying interest come in off of that forecast, and that's probably what we're going to trade into the closing bell today. So no private export sale announcements. We have census crush this afternoon at 2 o'clock. Weekly export sales are delayed until tomorrow. The EIA report is coming out this morning. So we are starting to get back into that mode where we get a lot of these reports. And probably the key one to focus on is a week from tomorrow. That's the USDA supply and demand report. That's going to be a big one because it's a final production number for corn and soybeans. We get our first look at winter wheat production, what we're going to plant for this next year, as well as adjustments on any stocks. And I think the trade wants to be friendly for corn going into it, so I don't expect to see much in the way of weakness in the next 6 to 7 trading sessions ahead of that report for the corn market.
So, Brian, you mentioned that report coming up next week, a week from Friday. And last week was a holiday-shortened week. This week is a holiday-shortened week. But we take the day off in a week from today, next Thursday on the 9th, and that's because of in observance of the funeral for former President Carter. Is that kind of throwing another kink into the slinky, if you will?
Well, we're not taking the day off. We're closing at 12:15 that day. The cash stock markets will be closed that day, but not the futures markets. So we're fully trading on Thursday, the 9th, but we are going to close a little bit early that day, about an hour early for the grain and livestock markets.
Okay, thanks for the clarification on that. Hang on, let's come back, talk livestock futures. Market Day Report continues in a moment. Okay, new year and maybe a new outlook on cash cattle. We'll see how that continues to develop over the next few weeks. Live cattle futures, though, settling on Tuesday. February, 191.60, $1.30 higher. April, 125 higher at 194.27. Over to the feeders, and January on Tuesday at 263.02, $1.40 higher, 192 higher on the March at 262.97. Hogs have gained 24.5% from 1 year ago, but lower on the session Tuesday, February 81.30 off 32, and June and July both losing that $100 range. All right, let's go back to Brian Hoops, Midwest Market Solutions. What do you see in the protein sector?
Well, we did have big gains in the futures market on Tuesday, and I would suspect we're going to try and add to those gains a little bit this morning and into Friday till we get that cash cattle trade. So December went off the board on Tuesday, and it left February at a little bit of a discount to the cash markets that we saw over the last 2 weeks. So February needs to gain a little bit of ground. Doesn't have to do it all in one day, but should be firmer based off of the discount to the cash markets. Cash could be at least steady this week, maybe even a little bit better. The packer margins have improved a lot since we talked last week. They went from about $70 in the red, maybe the $10, $15, $20 in the red today. It kind of depends on what happens the next couple of days with these cutouts. Maybe we can get those margins back to even if the cutouts gain a little bit more ground. That's one of the key thing will be for the cattle market. Of course, next week it's going to be very cold across the plains, maybe some snow, maybe some ice in areas. That's usually supportive for the cattle market as well. Hog weights were released this morning, and they jumped quite a few pounds, about almost 3 pounds from a week ago. Now, they're almost the same amount as what they were fully steady with a year ago, but they're very heavy, over 292.5 pounds or so. That's a heavy carcass animal, and no doubt will keep some pressure on the supply side of things for the hog market. And when you look at the charts technically, we've been talking about this as we violated some technical support over the last couple of days. That hog market looks like it's gone from a bullish type market starting off the new year, maybe in a technical downtrend, and with the funds being net long, that doesn't bode well for the hog futures.
All right, before we let you go, you mentioned the cold weather. Let's look at the energies real quick, and we'll start with West Texas Intermediate, as it has been trading 4.6% higher week over week, 73.04 up $1.32. Gasoline futures, we'll take a quick look at those moving higher. And nat gas, the big gains there, 21.4% gains month over month. Still more room for it to go higher?
Yeah, I'm afraid so. We're getting into this cold time of the year. Demand usually picks up for nat gas, for crude oils. We start to get into the more driving season, bigger driving season. They'll start blending the summer blend instead of the winter blends here in a few weeks. So yeah, demand usually starts to pick up for almost all these energies as we go into late January and into February.
All right, Brian, always good to see you. Brian Hoops is President, Midwest Market Solutions. We'll see you back here in the morning. All right.